Hello my fellow investors and welcome back to another stock analysis video. Today guys, I actually want to take a look at something that I did not take a look at it when it actually came out, and that was essentially a stock analysis on the company Costco. As you can see right here, they did have earnings on Thursday, and we're actually going to have a twofer for this video. Let's do a quick stock analysis as well as take a look at their earnings report, guys, because, well, Costco actually had something very interesting happen when their earnings came out, and this actually might fare to be a pretty decent point to buy this company at. So with that said, let's get started with this analysis. And right here guys, we have Costco Wholesale's earnings report. Now I will have this website link in the description below. It'll be the first one, just in case if you guys want to take a further look at it. You know, it is fairly lengthy, it does go into a lot more numbers than what I will go to into this video. But we are going to take a look at this just on a very quick note. So here we have, guys, Costco's earnings report. Now the first thing that I have to point out is that when it comes to retail stores or just companies like Costco, right, which is essentially like a retail store, you have to take a look at something called comparable store sales, and every company kind of measures this differently. So my suggestion to you is whenever you do like a retail company, you want to do is Control F and then put comparable and see how they define it as. Now luckily for us, Costco, it's literally right here, so that's actually very good. They make it nice and easy for us. So we got net sales for the quarter increased 15.2% to $70.76 billion from $61.44 billion. That's actually really good, guys. Net sales for the fiscal year increased 16% to $222.73 billion from $192.05 billion last year. That is another major increase, guys, of what, $30 billion? That is absolutely insane. Comparable sales for the fourth quarter and the fiscal year were as follows, and they actually break it down fairly simply. You can see in the US on the 52-week, they went up 15.8%. In Canada, 15.2%. Other international, 6.6%. Total company, 14.4%. And e-commerce at 10.1%, which is actually fairly surprising because, well, it's fairly comparable to that of the total company, as you can see right here. So fairly interesting. Now this does exclude the impacts of changes in gasoline prices and foreign exchanges. Net income for the fourth quarter was $1.868 billion, a $4.20, very nice, per diluted share. So the EPS was $4.20 compared to $1.67 billion and $3.76 per diluted share last year. So they went up a massive amount. Last year's fourth quarter was negatively impacted by a write-off of information technology assets of $84 million pre-tax. So they actually make it very nicely because they did have a write-off of $84 million. Net income for the fiscal year was $5.84 billion, which was $13.14 per diluted share compared to the $5 billion, $11.27 per diluted share the prior year. Pretty much, guys, they beat every single time. And it even goes on to say Costco operates 838 warehouses, including 578 in the United States and Puerto Rico, 107 in Canada, 40 in Mexico, 31 in Japan, 29 in the UK, 17 in Korea, 14 in Taiwan, 13 in Australia, 4 in Spain, 2 in each France and China, and 1 in Iceland. Costco also operates e-commerce sites in the US, Canada, United Kingdom, Mexico, Korea, Taiwan, and Japan and Australia. So yeah, guys, they actually make it very nice for us to read here. Again, I will have this in the link in the description just so that way you guys can read further if you so wish to do so. But something interesting that happened when these earnings came out, as you can see, it was actually fairly good. However, even with that, their share price on Friday fell 4.26%. Now, post-market, they did go up around 0.11%, but overall, guys, they fell 20.77 points. So that's actually fairly interesting because, as you can see on the 52-week range, we are around $60 away from the 52-week low. So does this actually curtail for us to buy this company at this current share price? Well, let's actually do a quick stock analysis on on this company. One thing that a lot of people love about this company, aside from just the money printing that they do, is this dividend, guys. Current yield of 0.77%, 90 cents per share for an annual payout of $3.60. 5-year CAGR of 12.81%, really solid, with 17 consecutive years. Ex-dividend date passed as of July 28th, payout date was August 12th, and they pay their dividends quarterly. And now, guys, coming into the calculator, we got the ticker symbol for COS, market cap of $206.6 billion with a PE of 35.5. So with a current share price of $466, this is telling me that, yeah, it is still fairly expensive in accordance to their PE. In accordance, looking at this dividend, however, of $3.60, we can see that they pay out almost $1.6 billion in dividends every single year. And in regards to their cash flow, on the 5-year average, they're left with $2.7 billion. On the last year, they're left with $2.5 billion. And looking at these ratios, you can see they're still fairly below the 60% range that I like to buy it at. Looking now at the fundamentals, guys, let's do this really quickly. Starting, of course, with the net income, we got a very nice consistent increase on their net income, as you can see, from 3.1 billion to 5.6 billion, increase of 80%. Looking now at the free cash flow, it is looking kind of wavery here and there, and unfortunately they actually were coming down from 3 years ago to 1 year ago, but it is still an increase on the 5-year of 46% with an average of $4.3 billion. The revenue is also looking amazing, consistently increasing on the 5-year, increase of 60.31%. Assets minus liabilities is also looking very good. A couple hiccups here and there, but nonetheless, it is still looking very good, consistently increasing. And well, looking at the average assets and average liabilities, we get around $18 billion. The cash flow minus liabilities could be a little bit better. However, you can see they do have instances where they are trying to increase this back. So you can see as of 1 year ago, they're at negative $32 billion, and 2 years ago, they were at their lowest at negative $35.8 billion. Average cash flow minus the average liabilities is around negative $30 billion. Shares outstanding actually came in as a surprise, because you would think that Costco would be buying back shares. Actually, they are not. They're issuing a little bit at around 1.03% on the 5-year, and from the previous to the current year at around 0.1%. Now, the reason why I don't consider this as a bad thing is because, guys, their share price is very much overpriced, and I honestly think that they see this as well. So they're just issuing shares when the share price is high, so that way they can essentially get that cash back. 1% isn't too much of a big deal. I don't necessarily care too much about this. It is not too much of a dilution. And their current cash and equivalents, they are at $10.2 billion with an average of $9.73 billion. So as you can clearly see, guys, all of their fundamentals are looking really solid. But $466, is this a good share price to buy it at? The PE says no, but let's actually make some assumptions into the future based on revenue growth and predicted share buyback with a required rate of return of 10% to see what we can actually get. So coming over here, guys, to the growth tab in Seeking Alpha, we can see that the forward revenue growth is at around 10% and the year over year is 15.83. Costco, guys, is a company that I don't think people will ever stop shopping at. But I do think that the economic downturn that we are getting is definitely going to take a hit on them. So for the highest assumption, let's actually start with this. For the highest assumption of revenue, let's actually say that they'll do at around like 8%. Let's come down to 6% for the median and 4% for the lowest assumption. Now for the projected share buyback, guys, well, we have seen that they are issuing shares, right? But the share price is very much overpriced. And as we saw in the 52-week range, their highest was $612, guys. That is insane. So $200. So as you can see, they have fallen $200. If they continue to fall, I have a feeling that they will buy back shares once their share price actually gets really low and it's not as expensive as they are. So let's actually say that the share price will actually remain high and say that they'll continue to issue shares at around 1% within the next 4 years for the low assumption. Let's say that they don't issue any more shares, and let's put it at 0 for the median and 1% for the highest assumption, meaning that it'll fall and we may actually see them buy back shares. Guys, this puts me between the ranges of the target share price, not adjusting for debt, of $388.33 to $454.41, not adjusting for debt. So as you can see, based off of this, well, we would still need it to fall a little bit more, guys. Now, looking at the 52-week range, we were actually there under this median assumption just a couple months ago when it reached the low at around $406. Now, adjusting for debt, however, guys, this thing goes up a massive amount, and the reason is because they literally have no net debt. Their net debt is in the negatives and their cash and equivalents is in the positive, therefore the price would automatically go up. So as you can clearly see, this is essentially what you would get for the company adjusting for debt. In my personal opinion, I would go for the target share prices not adjusting for debt, just because they are lower, and the less you pay for something today, the more returns you're going to have in the future. So as you can clearly see here, we are fairly close to the target share price not adjusting for debt for the high assumption of around $12 or so, and $420 for the median assumption. So if we actually fall down to like around $400 again in the next upcoming months, this might actually be a fairly decent price to buy this company at. Now, obviously, as I say in every single video, this is not financial advice, guys. Have this calculator, is available for free. Make your own assumptions. Every investment is the present value of all future cash flow. So please have this calculator. It will be the second link in the description to a video where all the links are in that video, and I even show where to get all of the numbers to put into this calculator so that way you could actually make it work. I also have, guys, available for all of you guys, the book value calculator for companies like banks, insurances, my reevaluation calculator, and a dividend tracking sheet where you can use to track companies like these that actually have a dividend. In fact, I actually have Costco right here, just so that way you guys can see that I do own this company a little bit, around half a share or so, and you know, I do use this calculator to track these dividends. So please have this calculator. All I'm asking for in return, guys, is just like, subscribe, comment. Really does help here with the algorithm on YouTube. Thank you so much for the 1,100 subscribers as if I'm recording this video. Oh my God, thank you all so much. I just cannot believe it. I honestly, thank you so much. You guys are just, it's just incredible. Thank you so much. Hopefully you guys like that new mini series that I'm starting, where I'm going to cover 3 different companies in each individual sector that are fair value today after the recent crash. So please like, subscribe, comment. That's really all I'm asking for. Looking now at Costco's dividend, guys, they don't really have a high dividend, and on top of that, their share price is really high, so you're gonna need a lot of money in order to get like $100+ in annual dividends. But if you were to put in $5,725, this would net you $44.19 in annual dividends. So as you can see, it is fairly low, guys, but Costco, you don't really buy it for a dividend. You mainly buy it for the share appreciation, and the dividend is just like icing on the cake at this point, right? It is not the main course. So when it comes to a dividend perspective, mainly buy it for the future dividend increases, as well as just the money printing that they do, because they just absolutely make money left and right. So all in all, when it comes to Costco, it's looking like it might actually fall within a good share price at around the $420 mark. But again, that's just based off of my assumption. Aside from that, guys, it is a beast of a company. I absolutely love it, and I don't think people are going to stop buying at Costco. That pretty much does it for this video. Like if you like, comment, subscribe. It really does help her with the algorithm on YouTube. You guys can follow me on my new tech sites, link in the description below. So with that said, peace out, and I will see you all in the next stock analysis video.